Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly video market update for Wednesday, April the 15th. And normally we would be saying, happy tax day or whatever, but not this year, right? We've got a lot of other things to worry about, and everything's been delayed and postponed and all that kind of stuff. So, as it is now, we are in total limbo with very, very conflicting data coming in from all different directions. Most of it bad, and how bad this thing is going to be. And, we had retail sales and, railroad traffic, beige book information today, all kind of, stuff that is pointing to a pretty good, downward spiral and all that kind of stuff. However, in the market, we've been ripping to new highs pretty steadily over the last. Let's do a 10-day chart here, and as you can see here, from this low here, 2450 essentially, up to 2850. So we've had a 400-point move literally straight up, in the S&P. And that's a 10-day chart with these massive gaps, gap. Look at that gap right there. Gap, huge gaps. And then yesterday we had a gap down, and then today we had a chop to nothing day, just completely paint drying, not much going on. But as you can see, I've got on my chart here, you see this 50%. At 27.90, this is a 50% retracement. I'll show you in a second, from the high to the low and 50% back up. And that's where you're supposed to stall out, right? And look how many times we've just kind of hung out right at that level, 50% retracement right there. And I'll show you, I'll go out on a longer time frame and I'll show you what that looks like, so we kind of get an idea. So here, and I've got voodoo lines on here too, so you'll see a lot of other lines. Matter of fact, let me do this. Let me edit these on a daily, clean that up a little bit. Okay, so from up here, from the high, the all-time high, 3,400, straight down to 2,200 roughly, and then we've bounced back 50%. Now, we've all been looking at this. Everyone knows that level's there. It's not like it's a big secret. The only thing that's pushed us up this far, in my opinion, is the Fed dump truckloads of cash, into the market to keep it going. We've never had that before. I don't think, I've been trading professionally for over 30 years, and I've never seen this much selling come back this quickly. Normally, we get a little up and then more down. Maybe we retest this, maybe we take it out, and it takes a while in time to figure out what's going on, how bad is it, all that kind of stuff. Well, this time they just back the truck up and start dumping, truckloads of money on the market, and so far it's working. I'm very suspect that it's gonna, work long term. I don't know. It's really tough to say. But I do know we've got lots of bad data coming down, on us in the next couple of weeks. We've also got earnings that has started this week. So far, they are not good. We had Goldman Sachs and JP Morgan, Wells Fargo, Bank of America, all bad. Profits way down, all that kind of stuff. And next week we get into next week and the week after we get into Amazon, Apple, Facebook, all that, all that stuff. And there are not many bright spots in the morning in the market, except for if you look at Amazon. Of course, Amazon's up. Tesla, Netflix. I'm trying to think of the ones. Costco, Walmart. That you would kind of expect. Zoom for the conference, call type thing. But it still doesn't inspire a lot of confidence in, in the way this market, or where we are in this market right now. So here's the question: do we think that we're just going to keep on going and we're going to go back up here like nothing ever happened and all that? And apparently some people think so. I don't. I guess anything's possible. I keep hearing, the economy is going to the switch is going to get flipped back on May 1st. We're all going to go back to work. Everything's going to be great. And it's possible. Even then, I think we're going to have a lot of lingering fallout effects from everything that's been done. So I'm not looking this high. The highest, I saw a 3,600 end of year price target by, I can't remember who that was, what firm it was. But anyway, most of them are around 3,000, 2,750. I saw 3,200. So most are kind of hanging out in this area, which is reasonable for end of year. In the shorter term, let me clean this up a little bit. I think, and this is the S&P, and we can kind of judge everything off of the S&P. But in the shorter run, you see at 618, I think we could reach up there and touch that. That's at 29.40. You see that right there? That's actually a snow line, this voodoo snow line there. At 29.40, we've spent a lot of time at 29.40 over the last couple of years. I would be really kind of surprised if we got much higher than that. And in fact, we really kind of stalled out here today. I wouldn't be surprised if we make a trip back down here to this red line, which is our fire line, and that's the most important line, is the fire line. And then, and I'm talking about over the next couple of weeks. I have no idea what's going to happen in the next couple of days, but next couple of weeks, I think probably that's your upside target. Let me, I'll clean it up for you. I think, if I could write the script, I would say maybe we come up here, and then we, maybe we bounce around here for a minute, and then we come back down here, and then it's anybody's guess. We'll visit that when we get there in a couple of weeks, but I think it's possible that all these earnings, we know they're going to be horrible and all that kind of stuff, that that we just go this way. Maybe come down here, very likely. From there, if we get down here, do we bounce? Do we take it out? I don't know. And there's no way to know this stuff now. We can talk about it and make decisions or make talking points around this and that. But in reality, we don't even know when this virus thing's going to be over and the lockdown, and people can actually get back to work and the economy can kind of start moving again. So we have to make decisions for the next couple of days, couple of weeks. And as I see it right now, I could see more upside here in the short run. We're running right into earnings. We probably will see some good earnings from some companies. Amazon, again, Netflix, your coronavirus stocks that benefit. All the rest are going to be terrible, but everybody knows that. It's not going to be a big shock when people have bad earnings. So, we're kind of in limbo here. And because of that, I've been doing some range-bound type spreads working extremely well. Here, actually, most of mine are probably in this area. So that is what I'm focused on. I'm not doing, I don't have anything up here at the moment. I've got a couple of stragglers down here, and I may add a little bit more. If we do get up here and reach any higher levels, I'll start adding on some other stuff, and I'll probably start here and work my way kind of back down. And this is the S&P. I'll probably do it in the rut primarily, or the S&P in the rut first and the NASDAQ second, or last, I guess I should say, because we've got all of the FANG stocks trailing NASDAQ. If there's going to be any strength, it'll probably be in the NASDAQ. So anyway, we'll keep an eye out for that, but I'll watch the rut to probably pull back first. So anyway, I hope this helps, makes sense. As always, as I've been saying the last month or two, trade very light. I've only got 2 positions of any size on right now. Very, very light. And just sitting on cash, waiting and watching, being very opportunistic as we have the swings and we see things unfold in front of us and are able to jump on them. You don't want to have too much stuff to manage in a market like this, so be careful, limit your size, and with that, let me wind it up and have a great rest of your day, and I'll see you at the next update. Thanks.